It's Friday afternoon in Sydney, and that means it's time for Friday Beers with Mark and Stuart. I'm Stuart.
I'm Mark.
And Mark, we've got some great research just out on Revassim.
Yeah, published a note on Revassim last week, I think.
Right.
And it's all about Cree in there. So the company announced a big deal they've done with Cree,
right?
A multi-year deal.
Okay.
And Cree is the largest player in silicon carbide semiconductors, and these are used for power management.
Okay.
And there's a huge market for that in electric vehicles, for one.
Right.
So that's a huge market
but
in itself.
It's fair to say somewhere in our lives we have a Cree semiconductor sitting at the base of the devices we use, right?
Exactly.
Right.
Yeah. And so they're the number one player in that space. I think well over 50% market share.
Right.
And Revassim signed a deal with them for equipment to supply Cree with certain equipment for the manufacturing of silicon carbide chips. Now, it's the biggest fish out there for any company trying to supply to silicon carbide manufacturers.
Right.
Revassim landed them, but the share price is in the crapper basically.
Okay.
And it's really strange. We've passed that inflection point in the semiconductor cycle. Revassim signed this deal with Cree, and the share price is doing nothing, which is flabbergasted.
So the smart money, which is the people who listen to us, stand to make a decent profit on Revassim at current prices, right?
We're quite bullish looking at the valuation. And so have a look at the report. It's an update out on our website.
Right. But without further ado, it's time to get into the beers.
Absolutely. Wow, they're actually cold too.
Cold.
What happened?
So we use some of our store credit at Kogan to get a refrigerator. And I know.
Don't get me started on cold. But anyway.
You know, I like my beers warm, but you don't. So now most of our beers are in the refrigerator. But it got me thinking. Kogan is obviously a genuine success story in Australian retail. At the same time, you can't open the newspaper or kicking on the TV without hearing about some old-fashioned bricks and mortar retail going belly up in Australia at the moment.
Yeah.
So there seems to be a real bifurcation point. Kmart and Big W and online doing well. David Jones, to a lesser extent, doing okay. And then the middle ground, no one's surviving. What's going on there?
Yeah, well, it's basically consumers opting for either cheap and still good quality, or sort of the high-end market.
Right.
And this is true in food. This is true in retail, in fashion retail, for instance.
Yeah.
And Morningstar published a report last week, talking about retailers in general. So or I should say food retailers. So Woolies, Coles. And basically, it is a perfect example of a food retailer sort of in that middle ground.
Right.
So it's not cheap like Aldi. It's not expensive like, for instance, a chain like Waitrose in the UK.
Right.
But it's right in that middle ground, and that's exactly where sort of the pain is usually.
Right.
Now, there's not a high-end retailer, I think, in Australia. You got Harbord Growers and things like that. It's sort of niche plays, but that middle ground is vulnerable. And basically, what the report is saying, both shares are priced for a return to sort of duopoly margins.
Right.
If you look at the share prices right now.
Right.
Really expensive from that point of view. The market is basically expecting them to go back to those peak margins. Morningstar is arguing, look, you've got Aldi in the market. You're not going back to those margins that we saw a long time ago,
right?
Because it's just a different market dynamic. So they're quite negative on it. There's a big gap in current share price and their fair value targets.
Right.
So that got us thinking about retail in general. I think looking at it with a sort of a broader view, if you look at sports retailing like Rebel,
right,
they'll be hit by Decathlon entering the Aussie market a little while ago.
Yes. Little known French company that's about to slaughter local sporting goods stores in this side of the Pacific, right?
It's like IKEA,
right.
So they don't have a shop in every mall,
right.
But it's huge stores like IKEA,
right,
in certain strategic places in a city,
right.
And the quality is really good. Prices are well below what Rebel would charge, and so those sorts of solutions are coming to the Aussie market.
Okay, so there's probably more pain where that came from for the retailers that can't adapt properly.
I suspect so. Yeah.
All right.
So talking about retail, by the way.
Yes.
Do you know why Barbie doesn't have any kids?
No, why?
Because Ken always comes in a different box.
Okay, and now it's time for Whatever Happened To. Sad news this week. Paul Volcker, chairman of the Federal Reserve 1979 to 1987, is no longer with us.
Yep.
So that's what happened to Paul Volcker.
Yeah.
Now, why is everyone so sad about Paul Volcker?
Well, he basically, I wouldn't say single-handedly, but he saved the U.S. economy, and by default, almost
the world economy.
The world economy, late 70s, early 80s, by just yanking up the interest rates, and bringing inflation in the U.S. under control.
Right.
And that was a big problem, still is, in the sense that central banks, other than the ECB and the former sort of the Deutsche Bank, which was sort of the example for the ECB.
Yes.
They had one instrument, which was interest rates, and
Yes.
one target, which was price stability.
Right.
But the Fed, RBA have multiple targets basically: price stability, optimal economic growth.
Yes.
And as Tinbergen, Dutch economist, 50 years ago, showed, you can, as a central bank, you can only have one target if you have one instrument.
Right.
So you can't use the interest rate policy for different targets. So you want a Nobel Prize for that. And the Bundesbank was structured after that, and so was the ECB.
Right.
And you see a lot of independence there. If you look at the US, where Trump right now is pushing for lower interest rates,
Right.
and I think Powell is holding steady on that. But and the same, by the way, in Australia, I think.
Right.
You got pressure on central banks. But yeah, so that's a different sort of model. What Volcker did was very independent back in the day. He
Yes.
pushed up interest rates to more than, I think, 21.5%.
Absolutely.
Brought inflation under control.
I mean, we're old enough to remember the bone-jarring recession of the early 80s. It was pretty brutal.
Yeah, it was.
Right.
Yeah, and so that was what he did in his sort of formative years. I wouldn't say not formative years, early years,
Yes.
early days, and then later on he helped the Obama administration
Right.
with the so-called Volcker rule, basically saying banks shouldn't be trading for themselves, proprietary trading,
Yes.
and trading for clients at the same time.
Right.
So he sort of broke that up, and it's sort of bound back now by under Trump, and the. Not entirely, but it's sort of partially wound back.
Right.
So Volcker's contribution to the world economy was sort of in the early 80s.
Right.
And now it's time to hear from our old friend Conan the Contrarian.
Ordinarily, when I play Conan, I'm looking for stocks that have got terribly beaten up.
Be Conan.
I'm looking for stocks that have been terribly beaten up and can turn around. This time around, I'm looking at a stock that's quintupled. And I think it's not only pricing the future, it's pricing the hereafter as well.
Right.
And that's Avita Medical. AVH is the code. This has been an Australian life sciences success story. If you think back about 20 years ago, there was a burn surgeon in Perth called Fiona Wood. She invented spray on skin. Easy way to treat burns. When the victims of the Bali bombings in 2002 came back, they were treated with that as well.
Right.
That eventually went into a company which became Avita Medical. They've now gained approval for that product in all major jurisdictions. And the stock has quintupled in the last 11 months. It's now capitalised at more than
11 months.
in just the last 11
Wow,
months.
all right.
It's now capitalised at more than $1 billion on the expectation that they will now take the world by storm with.
So market cap 1.2 billion, but EBITDA negative still.
Right.
It's through in the next couple of years.
Right. So yeah, what are people got to watch out for with this one? Burns are actually a declining market. Less people burn themselves every year, pretty much in most countries around the world. So it's difficult to carve out a large market opportunity just in burns.
Right.
And it's interesting to me, the company has talked about other opportunities such as treating soft tissue injuries or a rare skin disorder called vitiligo, for example.
Right.
But I think the company will struggle to meet the kind of expectations that have been built into the share price just lately. The shorts actually agree with me on this one. It's about 17% shorted.
Right.
So it's one of the more heavily shorted stocks on ASX at the moment.
Someone's going to get burned on this.
I think, for the folks who have skin in the game, watch out because you could get burnt.
All right, then coming to this one. Atomic.
Right. So a couple of times on our show, we've featured that wonderful Western Australian brewer called Gage Roads, ASX GRB.
Whatever. Is there any research out on these guys?
Look, the existing research is inadequate. I think they really need some good, solid, independent research.
Yeah.
Yeah.
Wink, wink, nudge, nudge, say no more.
Now, one of the things I like about Gage Roads, this is the Atomic IPA. They were one of the pioneers of craft beer in Australia, beginning in about 2005, when it was just becoming respectable. This is their attempt to create a beer that will really appeal to the craft beer aficionados, at the same time as they use the Gage Road brand to broaden their market opportunity. So, pretty hopped up IPA. They've got Simcoe in this, a bit of Amarillo, Centennial, other stuff. That's where you get the bitter kind of feel. But it finishes
only
nicely.
45 IBU.
Right.
It's not high.
No, it's a phrase I often use. It's drinkable, but the folks who like their craft beer is going to like this one. Most recent GABS survey, I think, put it at the 66th most liked beer on the survey out of 100. So yeah, not a bad beer from a great brewing company that needs some independent investment research from a firm like ours.
On that note,
Have a great week, investors.
see you next week.